Welcome to The Tax Factor, the top 20 business and investment podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Rahana Earl and Roger Holman.
Welcome to The Tax Factor, the top 20 business and investment podcast series from Blick Rothenberg that keeps you up to date on the latest tax news. I'm Roger Holman.
And I'm Rahana Earl. I hope everyone had a great bank holiday weekend and fantastic that it's only a couple of weeks until the next one. So, Roger, are we going to play Tom's Poppadom quiz this week?
I'm afraid I don't have a Poppadom quiz this week, Rahana. But we are talking about video games later.
Fantastic. Something I wish I was better at, given my kids always seem to beat me at Mario Kart. So, Roger, shall we start with the first topic, which is to do with the fact that there have been some changes to the rules on who needs to file a tax return after the income threshold was raised for the 23-24 tax year. So, prior to the 6th of April 2023, taxpayers who were earning above $100,000 were required to file a tax return, even if all of the income was taxed at source through pay as you earn. This threshold has now increased to £150,000 from the 6th of April 2023. So for 23-24, anyone earning between 100 and 150k no longer has to file a tax return automatically if they are paid through pay as you earn and have no other sources of income which are taxable and do not meet any of the other criteria for having to file a tax return. To inform people, HMRC have been issuing letters, but it's also recommended that taxpayers use its online tool to check whether or not they need to submit a tax return. In case you're wondering what the other factors might be for filing a tax return, if you are within that threshold, then some of them are, for example, receiving any untaxed income, which is over £2,500. If you're a partner in a business partnership, if you pay high income child benefit charge, you're self-employed with a gross business income over £1,000, or you receive income from outside of the UK. I actually did go onto the HMRC website myself and had a little play around with the tool just to see if it was intuitive. And actually, it is really quite straightforward. From 2024-25 onwards, there are more changes, and the income threshold to complete a tax return for pay as you earn only taxpayers will be removed completely. So I really do think that taxpayers need to be vigilant if they are receiving any other income and really thinking about whether or not they need to file a tax return with the rules changing between this year's filing, next year's filing and going forward.
That's right, Rahana. And I think this increase in the earnings threshold is expected to remove almost 340,000 taxpayers from self-assessment filing. Perhaps that goes some way to help HMRC improve their service standards. As tax advisors, we always welcome this sort of simplification, but I just wonder whether it's actually going to be simplification, because if HMRC tell a taxpayer they don't need to file a tax return, it's actually still the taxpayer's responsibility to determine if they do. Taxpayers will need to still be aware that interest will be directly subject to income tax if it exceeds the savings allowance. And for someone with over £150,000 of income, that's actually going to be zero. So any interest they receive is going to be subject to income tax. Same will apply to dividend income with only a £500 dividend allowance. All of this is going to mean the burden is going to fall squarely on the taxpayer to make sure HMRC know all about their circumstances. Now, that's fine when you've got someone who sits in the same job for many years, but from my experience, when you change jobs, the system just doesn't really cope, especially if you have anything slightly out of the ordinary. You mentioned that child benefit is one of those aspects that takes you outside of the not having to file a tax return system. And I don't know if that many people will quite realise that, given the number of high-income child benefit cases there are.
100% agreed, Roger. I think it could be a bit of a trap for people, actually. So HMRC might be thinking that they are making this easier for people, but I think people will potentially get caught out.
That's exactly right.
So I think, the advice is definitely go on to the HMRC online tool, have a check, make sure that you're sort of comfortable between the different thresholds, whether or not you need to actually file a tax return for 23-24 and for 24-25, sort of going forward, and keep an eye on the rules, because you could be caught out if you think that there's nothing to do. I think the other thing to be aware of, Roger, is that even if you receive a notification from HMRC to say that you don't need to file, you shouldn't take that as carte blanche, because they don't always get it right and they don't necessarily know what's going on in the rest of your kind of income world. world. So again, just in case you do receive a letter from HMRC, don't assume that it's correct because it may well not be.
That's right. And of course, there are penalties for filing your return late.
Exactly. And no one wants to be burdened with any late filing penalties or interest, etc., for not filing on time. So moving on to our next topic, Roger, we've discussed, and I think you've already actually mentioned it, the service levels from HMRC, something that I also talked about in my last episode, the fact that Labour are looking to recruit approximately another 5,000 extra people into HMRC if they get into power, because they think it will overall raise the tax revenue by 6 billion, something that I think a few of us have questioned, but let's go with that for now. However, there has been a recent report that said almost a third of HMRC staff were being paid kind of under the national minimum wage. And so in April, there had to be an unscheduled pay increase to ensure that HMRC was compliant with minimum wage thresholds. So this uplift is going to bring these HMRC employees above the national living wage threshold of £11.44 an hour, which came into force on the 1st of April this year. But, in reality, you'd hope that HMRC are getting this kind of thing right, because given they are the government department that's responsible for enforcing minimum wage rules, it does seem slightly bizarre that they're kind of not keeping abreast and had to make this kind of unscheduled increase in staff wages. And I think also, given the fact that they're trying to tempt people to join HMRC in order to kind of improve the service levels that taxpayers are receiving, I think it might be quite a challenge if anyone sees this press story in the newspapers and thinks, well, actually, that's something that I might go for, particularly as actually I think the wage increase has in fact impacted the helpline advisors and the people in the post room, and actually all the sort of people critically that normal taxpayers rely on to kind of keep their tax affairs moving.
That's right. And as I understand it, the government's living wage is actually set almost 5% lower than what the Living Wage Foundation calculates for someone needing to meet basic necessities to live. Given this, it begs the question as to whether or not Labour will be able to attract the numbers of people into HMRC that it wants to, unless something much more radical is done to alter pay levels. On another subject, it's probably worth noting that you mentioned the reduction in, or rather the increase in, the thresholds for filing a tax return. One threshold that's gone down is the CGT allowance, and this is going to cause quite an issue for all of those crypto traders. The CGT allowance has actually gone down now to £3,000. That means if you generate more capital gain on your crypto investments than £3,000, again, you've got to fill in a tax return. Now, there's going to be a lot of traders that won't really think about that when they're playing about with their crypto wallets.
Yeah, I mean, I agree. And actually, in my world, Roger, where people don't necessarily understand the kind of the rules if they're non-domiciled and they think potentially crypto that is outside of the UK is not reportable in the UK. So the rules are actually quite complex. And so adding this additional layer of complexity in the sense that I think a lot of people would get out of it by using the slightly larger CGT allowance in the previous years, actually the fact that the threshold has decreased quite significantly will pull a lot more people who probably ignored reporting for the last few years, really. In another episode, I talked about reliefs that have been announced in the budget for film, TV and theatre. So now we're going to turn to the gaming industry. Again, something that I wish I was definitely better at, because as I mentioned, I definitely get pushed to the limit by my children who are significantly better at playing these games than me. But the gaming industry is calling for some similar help actually to what the film and TV industries have received. There's the Independent Game Developers Association, which is called TIGA, and they have put together a 10-point manifesto, which has been backed by a cross-party group of MPs and sets out their priorities for improvements to the industry from a tax perspective, so they can maximise the potential of the global industry, which is estimated to be worth around $190 billion. In the UK, the sector currently employs around 25,000 people, and again, it's estimated that it contributes about 3.7 billion to UK GDP. The supporters of these moves are really hoping that the proposals will help to grow the video games industry a bit further and really accelerate that growth. One of the asks is for an independent games tax credit to boost production of UK independent games, which would be in addition to the existing video games expenditure credit. The reason for this is that the UK would become a more desirable location for productions of less than 15 million, and similar types of tax credits already exist in other countries such as Canada, France, Ireland, Belgium, Australia, and some of the US states as well. So I think this would definitely be a welcome investment for the industry. The National Games Accelerator is also proposed, which would target young startup companies and help them then move forward in the sector, providing grants of up to £150,000. And Dr. Richard Wilson, OBE, who is the CEO of TIGA, said that they've costed the proposals relating to these new incentives for the video games industry, and they think that it would create 2,600 or so additional games development jobs in the UK by 2028. And Deirdre Brock, who is an SNP MP, said that the manifesto that TIGA have put together outlines policies to grow the sector, addressing tax relief, finance and skills development. So policymakers should really be considering these ideas. And they do really include incentivisation for training as well across industry, including reform to the apprenticeship levy to allow employers to invest in high quality training. I think there's a huge amount to do. I think there's a lot to go for. They also need to look at things like competitive visas and salaries, etc., to get highly skilled workers from other countries into the UK games sector. So given the focus on immigration for the current government as well as future governments, along with constant rule changes to immigration, I think it's going to be important to ensure that the UK can continue to attract and retain the best talent in this industry, which hopefully will lead to very positive economic growth.
I couldn't agree more with that, Rihanna. The gaming industry is set to become one of the UK's success stories, but only if the government get it right. Actually, my son's currently studying a BTEC in esports.
Oh, well, he is definitely set up for the future then, Roger.
The last thing I think I'd like to speak about is the current thinking that the Tories are now not going to make any more giveaways before the election, with rumours actually saying that they're not going to hold an autumn statement. Now, us tax advisors and probably a lot of the economists out there were expecting more national insurance cuts, but with this potential leak, I wonder how the Conservatives will manufacture the feel-good factor that they're going to need, if the polls are to be believed, to actually generate the votes that they're going to need to form the next government.
Yeah, I mean, I agree again, Roger, because I think the cuts to national insurance, I think the Tories were expecting some kind of positive fallout from that. And as we know, that hasn't played out in the recent local election results. I think it will be very, very interesting to kind of watch this space and see what happens. I think it's probably all a little bit too late for the current government to really kind of pull that back, but we will see what they pull out of the hat.
Well, that's about all we've got time for this week.
If you enjoy The Tax Factor, and hopefully you do take a listen to our sister podcast series, Brave Business, hosted by journalist and broadcaster Declan Curry. The latest episode has just been released and looks at the topic of gender pay gap, pay equality and pay transparency. Joining Declan are Blick Rothenberg's Reward Services partner Stuart Hyland and ASET's Group People Officer Claire Jepras. You can find it on the Blick Rothenberg website or wherever you find The Tax Factor.
Next week, Matt Crawford and Rob Goodley are in the hot seat as we reach episode 40. From Rihanna and myself, it's goodbye until next time, and have a good weekend.
Goodbye.
That's The Tax Factor. We'd like to thank you for making us one of the UK's top 20 podcasts. Find all our previous episodes wherever you get your podcasts, and join us again next time on The Tax Factor.